follow a model. They're not disciplined, and they're not aiming for something. Like, look at the examples I'm showing you. 4 to 1, 10 to 1, 12 to 1. You can afford to get those losing trades when you're aiming for things like that. But you can't go out there looking for those setups right away, because you have to grow into your understanding about what it is the markets are doing. How do you know that the fair value gap wasn't going to close, ICT? The fact that when you're looking for the 3864 level, I prompted you on in the morning session yesterday, we had already drove deep from the opening at 9:30. It ran up, returned to the top of the fair value gap, premium high, and you'll know what I mean by looking at your charts if you draw them up like I showed you in the Twitter thread from yesterday's morning session. And it went down and dove down, made a low of the morning. Remember, it's going to be an inside day. Was the Thursday low likely to be taken out? No. Why? It's the last trading day of the year. No new money's going to be pushing anything. And the market's already been going down, so no new shorts are entering. So it's setting up the likelihood of what? A PM session reversal and short covering, and the algorithm will reprice aggressively, causing more what? More short covering. Everything I outlined and typed out in that trading view text. So what's it going to aim for? The level I showed you in the chart, I put a little trend line on. I said, make your chart look like this. Go back and look at the tweet. I can't delete it. I can't edit it. I can't do anything. Tens of thousands of people watched it happen right when I did it. More later on in the day. Extend that line out in time into 3 o'clock hour. Where does it go? Right where I said it was going to fucking go. 3864 buy side liquidity. When do you expect it to set up, Michael? The last hour of trading, PM session. Why? That last hour, the algorithm is going to run a series of macros. Macros are a short list of commands and orders that it produces fluctuations in price. Market on close orders are going to be a major driver, and one of those macros are just that. It's the last 20 to 25 minutes, specifically 15 minutes, that it'll kick in. And it's going to run for a pool of liquidity above or below the marketplace. All you have to do is do the work in figuring out why it should go to one or the other based on narrative. Narrative is what I outlined yesterday. The fact that it was going to be an inside day before it was an inside day, before the market even opened up. Knowing that when I left you in the morning session, I said, note the relative equal highs on your hourly chart. 3864, because somebody asked later on, did you mean this? And I corrected everybody by putting it right on the same tweet when I said, note those relative equal highs on your 60-minute chart. In that tweet, I replied to my own tweet and said, 3864 ... That way there was no miscommunication whatsoever, even though you had it drawn out in your chart in the morning session before the market even started trading. So all those levels and those fair value gaps, extend them through into the 3 o'clock to 4 o'clock hour, because the algorithm is doing the same thing. It's referring back to those levels, not your old lows and your old highs and classic support and resistance and bullshit trend lines. That does not work. Okay? You're not going to be able to hold a trade with a 1-tick stop with a diagonal trend line. You will never see Forex trade like that, where you can hold a stop like that. That's why I laugh at all these young guys out there saying, I always use a 1-pip stop loss. I can do it. I can do it. You can do it with a fucking demo. Yeah, you can do that. But do it with size in a real count, and I guarantee you, consistently, you'll never do it. But in futures, that is possible because these markets are much more refined. There isn't all of these different servers. Everybody has the same high and low. So, and then some of you are thinking, well, why the hell did you ever stop leaving? Why'd you leave that to go to Forex? Because Forex was moving around a lot, and that volatility really, like, man, I'm going over there because I can cowboy up in that. But futures has always been highly precise. Way, and probably now you just discovered how much precision really exists in it. And even I have people that used to trade on the floor, at the CME and the CBOT. They're students here. And they have communicated that they have no idea how the fuck I'm doing this. Now, these are the floor boys. These were the guys. These were the kings of the pit. And you don't think that that type of remark doesn't resonate with me? I know that they have they feel like they have hit the lottery here, because they have real world experience trading down in there in all the fucking chaos, screaming and hollering, big days, shitty days, big up days, big down days, crashes. They were in there. They were dealing with it, literally. And that transition from open outcry in the pits to go into electronic, and they got to now use a fucking chart. A lot of them couldn't do it. In fact, I got one floor trader that said, I could not make money when we come off the floor. And now I'm able to do it now because of what you're teaching. It makes so much fucking sense. Yeah. These are the floor fucking traders, okay? You know, they do the pivot numbers and stuff, and that was their numbers. And then they watched everything else around the volume flow that would come in. No charts in their hands. They're working with the number. I came out of that era with them. I wasn't on the floor with them, but I was open outcry. That's the way things worked. Everything was slow. Now it's a push of the button, instant gratification, instant fill, instant confirmation. Everything's instantaneous. We didn't have that shit, man. You had to call up and wait. And sometimes if you got a busy fucking signal, you're flipping the fuck out because the market's running to your stop and you want to get the hell out of it. Or you're stupid like I was a couple times and didn't have a fucking stop. And I'm like, fuck, I'm going to get my ass handed to me. And they won't answer the fucking phone. What the fuck's going on here? Or I called, I'm flipping out, and they say, okay, Lynn Waldock, I can take your call. H desk. Okay, 1 second. H desk, how can I help you? Account number, blah, 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 blah. Okay, what's your PIN? And you give them the wrong PIN. It's not the right PIN, right? No, it's not the right PIN. And you're giving them the fucking price you're trying to get out at in soybeans. Yeah, that's how fucking manic it can be. Like, it's crazy. Like, and the whole time, the market's not waiting for you. It's not waiting for you. It's moving. It's moving. And then you got to wait for them to confirm what you just told them, because they got to repeat it because everything's being recorded. And then once you say, yes, that's correct, they say, you want to hold for your confirmation? Yes. Okay. Then that sound of silence. And I'm looking at my quote track and I'm watching the fucking price just keep on steamrolling towards where it's Painville for me. That is the longest time interval that you're ever going to experience. And you don't have that now. You never experienced that, you young folks. You have no idea what that was like. None of you do. If you're less than, honestly, if you're less than, I don't know, maybe 40, 43, 44, you don't know what that feels like. Because you probably came up in the beginnings of electronic trading and the way of the dinosaur, open outcry and things like that, that was falling away fast. But the reason why that fair value gap stayed open, I want you to think about, you're into the race car, these funny cars, they're real long, skinny nose cars, and they race them real quick. The lights, they go from like yellow. I mean, I don't know if that's the right color, but then they go to green and they take off and they start running real quick, and they have to use parachutes in the back to stop them. Okay. Think about a market like that. Okay. Think about what I've outlined yesterday on the morning session, and I left you with 3864. That was, make sure you note that, because that's where the market's going to go. We go into the last part of the day, PM session. And if you did what I told you to do, make your charts look like what I had on mine and extend them like I teach you in mentorship. Extend them through. We are not supply and demand. Okay. We're not Online Trading Academy. We're not Sam Seiden. We don't have an issue with cutting through candles because the algorithm looks through candles. Sorry, that's just the way it is. So when you have an inefficiency, just because it closes that inefficiency in, that's not balanced. It's not a balanced void. Okay. It's just repriced to the inefficiency. Those levels of the high and low that makes that inefficiency will still be referred to by the algorithm. You see proof of it just by extending it through into the last hour of trading. Now, at 3:11 to 3:12 to 3:13 New York local time, which would be 5:11, 5:12, and 5:13 on New York time on TradingView's chart, 1 minute, there's a fair value gap there. And you see me drawing that in the little light blue. I took all the other fair value gaps because it would have been too much, because I knew I was going to put a watermark on it, because I know any type of trade like that, everybody's going to put that on their Instagram and say, join my signal service. Look, I can do that. They're fucking assholes. So I hate the fact that I got to do this, because I don't like seeing it clutter up the chart. But if I don't do it,